Jordan, really good to see you. Today, we are talking through 3 strategies to minimize your Social Security taxes. Many retirees are surprised to learn that above a certain income, Social Security is taxed. In retirement, it's important to know how all your income streams will be taxed and how to mitigate those taxes. So, Jordan, let's start at the top. How are Social Security taxes calculated?
Yeah, so the government has a table for us that basically for a married couple, if you have over $44,000 of income, that Social Security will be taxed up to 85% of the benefits. And
Wow.
depending if you're single or married, those thresholds can change. But obviously, your income has a direct effect on the taxable Social Security benefits you get.
Mhm. And as we can see here, this is all based on your provisional income. So, can you walk us through what adds up to be your provisional income?
Yeah, so provisional income is really 50% of your actual Social Security benefit plus any ordinary income. That could be income from W-2 wages, that could be income from 1089s or IRA distributions. Also, a lot of people have dividends and maybe they have capital gains in those accounts. Those are also affecting how much your Social Security will be taxable. And it also includes non-taxable municipal bonds. So muni bonds, those can also add to Social Security being taxable on your tax return.
Mhm. So now let's talk through then the 3 strategies to reduce your taxable income. And number one, you say consider converting your tax deferred accounts to Roth accounts or utilize Section 7702. And the whole reason we do this is to get our money out of those tax deferred accounts, which are your greatest liability, right?
100%. Because a lot of people, they see their accounts, they see that dollar figure in their account, like, oh, that's mine. Well, if it's in a 401k or an IRA, it's not 100% theirs because they haven't paid their tax debt on that money. So we highly recommend doing a plan and seeing how we can move from your IRA that's tax hostile into a Roth IRA that's going to be tax free and do that incrementally over a few period of years to make sure you get out of the IRS's control and you put that into your control. Because if you have income in a Roth IRA and you take that income out, your Social Security is not affected by that income. And you
Mhm.
mentioned there's Section 7702, which I think is phenomenal. It's actually been around longer than 401ks. This is actually specially designed life insurance for the tax advantages, where if you have a specialized policy not meant for death benefit, but really meant for income, you can draw on that as well and not have any impact on your Social Security benefits.
Wow, that's interesting. I didn't know it was older than the 401k too. That's neat. So your second strategy then, consider shifting income investments because some investments generate taxable income, others are non-taxable.
Yeah. So you want to align your money for what it's meant to do. Some people love a different company or they love dividend stocks. Oh, I love the stock. But if you have too many dividends in that stock, you're paying extra taxes for your federal tax return and on your Social Security, which you don't maybe need to do. So you want to make sure if you don't need income from that account, put that in a tax shelter, maybe IRA or Roth IRA, or have it more focused on growth because that extra income kind of just diminishes your overall returns. People these days are happy with the higher interest rates, money markets, kind of CDs, but now you're being taxed on that. And you get that little love letter come February or March called a 1099, and that has a direct impact on your total tax for that year.
Mhm. And the third strategy, you say you can delay claiming your Social Security benefits. I know that sounds straightforward, but I know it's incredibly complicated.
Yeah, a lot of times I get the question, when's the perfect time to take Social Security? Well, it really depends on your overall plan and your health. But many people, they could maybe delay their Social Security benefits to get that 8% bump up in their benefits. And during that delay period, they could actually do some Roth conversions while taxes are on sale right now to move money from those IRAs to the Roth IRAs, delay the Social Security so it increases. But you want to be careful because you don't want to just wait till 70 and get the max Social Security paycheck. Because my goal for our clients is to get the biggest pile of money from Social Security over your lifetime, not just the biggest paycheck. And you have to obviously coordinate that with your spouse to get that biggest pile of money.
I know there's really so much that goes into Social Security claiming strategies. I know you specialize in that, Jordan. If somebody has questions about anything that we've covered today or how they can implement these strategies, what's the best way to reach you?
Yeah, myself and our team are here for you to help answer these questions. Our number is 847-499-3454. We'd love to have a chance to talk to you and coordinate these tax strategies and Social Security inside your overall financial plan.
Perfect. All right, Jordan, thank you very much.
My pleasure.